G'day and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Great to have you back here at AusBiz. Let's take a look at what's happened overnight. Global stocks mostly higher following reports that the Trump administration is planning a more measured approach on tariffs against its US trading partners. On Wall Street, investors sought out those heavily discounted tech shares, which saw the S&P 500 rally to its highest level in more than 2 weeks, while the NASDAQ also surged. And the volatility index fell to its lowest level in more than a month. Nvidia, Meta, Amazon and Advanced Market Devices led the gains. And Tesla shares accelerated, recovering some of their recent steep losses, helped by optimism about the prospect of scaled-back US tariffs. Lockheed Martin fell after the Bank of America Global Research downgraded the weapons banker to a neutral from buy, and US-listed shares of Rio and BHP initially tracking the price of copper higher. Crypto stocks, they rallied as the Bitcoin price jumped, with MicroStrategy and Coinbase both advancing. Well, President Trump is likely to exclude a set of sector-specific tariffs when applying reciprocal levies on April 2nd. That's according to news reports citing Trump officials. The president has already flagged that he will impose tariffs of around 25% on cars, with similar duties on semiconductors and pharmaceutical imports. But he later agreed to delay some of those tariffs after a push by three of the largest US car makers for a waiver. And taking into account the possible effects of tariffs, Atlanta Fed President Raphael Bostic said he sees slower progress on inflation in coming months and now expects the Fed to cut its benchmark interest rate by just a quarter of a percentage point by the end of the year. Well, the US 2-year Treasury yield has risen to 4.04, the 10-year close to 4.33%. Markets now pricing in a 70% chance that the Fed funds rate will be cut by 25 basis points by June. Also boosting those yields was an unexpectedly strong reading for the services sector in S&P's PMI index for March, showing clear expansion in the final month of the quarter. The same index for manufacturing, however, undershot expectations and fell into contraction. Well, the pickup in business activity saw the US dollar jump to multi-week highs against the euro and the yen, the Aussie trading at 62.8 US cents. And the rally in risk assets has seen Bitcoin rise to $87,500 US dollars. Oil prices have gained as President Trump said he will impose a 25% tariff on countries that buy oil and gas from Venezuela. Brent crude futures more than 1% higher at $73 a barrel. Copper is off more than 0.5%. Iron ore surging close to 2.5% to $103 US dollars a tonne. And gold has eased as the US dollar rose. Spot gold off around 0.5% to $3,006 an ounce. So, what is driving markets at the moment? Steve Sosnick joining us from Interactive Brokers again. Steve, very good to catch up with you. Still all about what we're hearing from Donald Trump and those tariffs, with a view to Liberation Day, April 2nd. What is he doing at the moment, though? We're getting that news. Maybe there will be concessions made depending on which country or which sector. Is this all part of his negotiating tactics?
Well, good morning, Andrew. I certainly hope that this is part of a negotiating tactic rather than just sort of wavering back and forth. They want, the administration says that part of his negotiating strategy is to be unpredictable. That might be good in bipartite negotiations, but it's not something that's normally good for the markets. On the other hand, the softer stance is was regarded quite positively today. The feeling is it's been pretty binary, right? Good, more tariffs are bad, fewer tariffs are good. And so, the idea that there might be fewer tariffs was certainly welcome news.
So how did you view that market response? And I guess particularly some investors seeing stocks on sale. Does that mean perhaps they feel as though a bottom is in?
It's a little early to say that the bottom is in, but certainly, there was a big dose of FOMO today. Nobody wanted to miss that rally. And actually, what's very interesting is we'd seen our customers buying the entire way down. They were aggressively buying Nvidia and Net and Tesla particularly, but all the usual suspects, were well represented. Interestingly, that net buying faded considerably last week. So I think that rather than seeing some profit taking into it, I think you saw people chasing back in because they did not, they'd been sort of fighting the tape for a long time, finally stopped, and then missed the opportunity when the tape turned around today a bit. So I do think there was, part of the ludicrous mode in Tesla today was the result of that kind of activity.
It has been wild, hasn't it? That the move with Tesla, and of course, plays into the broader politics, I guess, of what's going on.
Indeed. Tesla's become a very politicized brand, to the point where that's been, their cars, their showrooms, their facilities have been, the subject of, you know, one side calls it terrorism, one side calls it protests, but either way, it has not been a pleasant situation. And so we'll know more about how that plays out when their earnings come out, about 6 weeks or so.
And Steve, I see you point to perhaps evidence of a Trump put that was late last week, in particular referencing those comments from Treasury Secretary Scott Bessent, saying that perhaps the administration is more focused on those 10-year rates rather than those equity prices we're seeing at the moment.
Yeah, that's kind of what the reason I think that we may have actually seen a bit of the Trump put in action was for exactly that reason. The Treasury Secretary has, and to some extent the president have basically been, downplaying the market correction that we saw. Yeah, the markets move, et cetera, et cetera. And Bessent has really sort of tried to get us to focus on the 10-year as their measure of success. Whereas in the first administration, President Trump was very all about viewing the stock market as a barometer. And so I do have to wonder whether some of the rhetoric we heard might have been intended to, get the stock market off its rear end a little bit. And so that would be, the quote unquote the Trump put, where they do their best to jawbone the market higher. We don't know if there's actual policy that will make the market go higher, because again, as we mentioned, the tariff policy is all over the place and somewhat opaque. But rhetorically, this might have had that effect. And you noted VIX plunging to like the lowest levels in about a month. 17 and a half we're not back to complacency, but we're certainly not seeing people rushing for protection at these prices. And again, if you perceive that the administration is giving you a put, why do you need to go out and buy one? That's kind of the rationale behind the Fed put, and that's kind of the rationale behind now the Trump put, is if one of those two entities will come to the market's rescue, well, then you don't really need to hedge quite so much, because they'll do it for you. You don't have to buy it yourself. That's already priced in.
Mind you, a week is obviously a long time in politics. It's an eternity in markets, is it not, Steve? Because goodness knows what could happen over the course of the next 7 days as we head towards that key April 2nd date.
Oh, absolutely. I took a week's vacation last week, and I try never to miss a Fed meeting and never miss a triple witching expiration. But my son's spring break coincided with that, and so we took the week off. And yeah, a lot changed since, in the course of a week. I spoke now 2 weeks ago. It's very much a moving target, and remember one thing about VIX, it's designed to provide the market's best estimate of volatility over the coming 30 days. So when VIX was rather high, the markets were expecting quite a bit of volatility, and to a certain extent, we got it. Now, to a certain extent, also, the volatility is behind us because we don't have the Fed meeting in our face anymore. And at least the markets decided that the tariff news might be a bit more benign. I would tend to think that just as buying dips tends to work in a wide range of financial assets, maybe it's something to think about again with VIX, because again, we over what is it now, a little over a week, this Liberation Day idea. We'll find out what happens then, but I certainly am not willing to go without protection and be ahead of a potentially very volatile period like that.
Steve, do you think we're at the point where we can see that Trump does have a grand plan, if you like, given he's obviously dismantling federal departments, there have been mass layoffs, he is completely unwinding the world order too, of course. Do you feel as though he has a plan that is on track, and as those around him say, that you're going to take a short-term hit, but the longer-term gain?
It's tough to say. I mean, I think that I'll argue that the Project 2025 playbook was indeed a long-term plan, and a lot of what we're seeing is coming out of that. I think the implementation is rather haphazard, if not sloppy. I certainly think that what Doge is doing, is surgery with a chainsaw rather than with a scalpel, and I think that's got a lot of people very uneasy. I think if you ask most Americans, do you think that there's waste that can be cut out of the federal government? Probably 90% or more would say, yeah, there's got to be. Do I think? But on the other hand, what Doge is doing is rather unpopular because it's so wholesale, and it's basically the tech mentality of break things and fix it later. Let's just certain amount of disruption for the sake of disruption. As for tariffs, the administration has a policy, but again, how it's being implemented, how it's being communicated, is causing some angst. And so this is why you saw markets pull back. Is we've both been at this for a while. We know that investors don't like uncertainty, and I think that while there's maybe a plan, it's also leavened with a lot of revenge and personal grievances. And so I think that it's people can get behind the plan, but I think markets are a little perturbed at how it's being implemented, or how it might be implemented.
Steve, always terrific to catch up. Look forward to doing it. So in a week's time, April 2nd our time, but the day before that key event. We'll join you then. Thanks for joining us from Interactive Brokers.
Thanks, Andrew. Take care.
All right, let's come back home, take a look at where we're likely to open locally then. And SPY futures up almost 0.5%, reflecting those strong gains we saw on Wall Street. Stay with us. The open is just a couple of minutes away.